Alright, in this video, we will see how to trade with the trend. I will let the winners run and will be using trailing stops. We target, or correctly speaking, intend to target, a low-risk, high-reward setup but without a fixed reward-risk ratio. And at the end, we will see a counter-trend trade in action with some aggressive risk management. In this case, we will be using NQE mini contract, 100-tick chart, a $200 risk, but we will set the default reward too high. However, depending on the levels we see on the chart, this might change. Before we dive in, just a quick heads up, pause the video now and take a moment to read the disclaimer. Let's dive into it. We are using NQ futures and the E-mini contract. And we are using the 100-tick chart. I have two moving averages on the chart. One is a 9-period exponential moving average. This shows me the short-term trend. The other is a 100-period simple moving average. This is to remind me of the larger trend, because when you zoomed into the chart, it is easy to misinterpret the larger trend. Make sure you are testing this on a practice account or a paper trading account. For this video, we are using a practice account. Here, the shorter exponential 9-period moving average is showing an uptrend. But the longer moving average, SMA 100, is showing sideways movement. This could be a range-bound market. When we zoom out, we can see that this is consolidating in the short term and might move in the direction of the bigger trend later on. We can get more clarity on higher timeframes, but it can also result in more confusion. For simplicity, we will focus on the 100-tick chart and focus only on what it shows. So it just changed direction again. If it breaks the last swing low, I am looking at getting into a short. That was quick, it broke the swing low. I will wait to get a short entry on the pullback to the last swing low. It filled the order, but there was a mistake. I did not set the reward risk settings correctly. And you will see that I froze for a moment there, where the trade should have hit a stop, but mine was not yet correctly configured. NQ moves fast, and freezes can cost you much more. Ideally, I would have been stopped out of the trade. But this was mistake number 2. I re-evaluated my bias quickly and managed the trade. This happens within seconds and adds enough pressure to make a wrong decision. I ultimately set a tighter stop and configured my risk settings correctly for the next trade. The simple action of dragging the stop above, even if momentary, is a bad move. I was lucky to have time and enough practice to prevent it, but that is the impulse that must be controlled. The third mistake I made was to keep the trade alive even after it hit my hypothetical stop. Ideally, one must get out of the trade immediately in such cases. Anyways, let us look into the trade setup now. I finally have an acceptable risk, slightly deeper than I wanted, but acceptable. If the minor swing high breaks, my trade setup is proven wrong, and it might become a bullish move.
Order filled.
That one hit the stop. Let us look at another trade. I have my bias, the market appears range-bound and consolidating. Because of that, I think we might see a downward move from the last swing high. I will place a sell limit order at that point. However, I am also looking at the price action. If the move upward is quick and straight, I am more confident it will be rejected. If the move upward comes with some pullback before, the pullback might offer a quick long opportunity. Alright, we had this pullback in the short-term uptrend. This is a good entry.
Order filled.
However, we also have resistance at the sell order price. I reduced my risk here and set the stop below the minor swing in the uptrend. And initially set the profit target at the resistance level. I moved my short or sell order a bit above to the next resistance level. In fact, I might cancel it if the price moves further in favor of the long trade. I see the price rejecting lower levels and potentially making a higher low again, and also a higher high in the same candle. This signals that the price might move upwards. However, I am also thinking of reducing risk. If the price changes direction, it is very likely going to hit the stop. Therefore, I set my stop to just about break even.
Order filled.
It got me out of the trade. Let's see further. If the price breaks the high of the last candle, I am tempted to get back in again.
Order
It
filled.
did, and immediately moved in favor of the trade. I used a market order to get in because I was expecting a breakout. But there is resistance right here, and if price breaks out of it, we might see a fast move upwards. However, it is crucial to manage the risk too. If the price reverses, it will hit the stops. Therefore, I am aggressively moving the stop towards break-even first. Now that the price is trending, I will trail the stops below the minor swing lows. I continue to trail the stop just below the lows of the pause. That is a little more aggressive compared to swing lows, and you shall see how close I came to getting ticked out on the stop. That was close. The price broke out again, and I am going to trail the stops close to the previous highs. And I continue to iterate with the trailing stops, giving it some room to move, but not giving away too much. Whenever a higher high is seen on the chart, I pull the trailing stop just near the swing low or the last higher low. The price is hesitating at this location. On a higher time frame, this could be a location with some decent resistance. If that is the case, it is wise to book all or partial profits at this stage. For simplicity, we are not looking at a higher time frame in this video. Without that knowledge, we can continue to trail the stops and let this winner run. I'm expecting the price to break through the highs here, but if it breaks the low where my stop is, it might be reverting to a mean.
Order filled.
There goes my stop. We made a decent profit on this trade. As you can see, it broke the stop and made a lower low. The 9-period moving average is in the early stages of a downward move. And then this could revert to a mean. Well, we don't know where the price might revert to, but I am seeing a possible counter trend setup here. I can see that the 100-period moving average is approaching resistance. I hypothesize that the price will revert to the 100-period moving average until it clears the resistance.
Order filled.
But that does not always happen. Also, there is decent space for the price to move up to the previous swing low or up to the 100-period moving average. The risk is low at this point. The stop is exactly at the previous high. Remember, when we are working against the trend and momentum, we must book the losses quickly and use tighter risk controls. You could use a smaller position size and add to positions when the trade works. A better confirmation and good levels would be seen on a higher time frame. We are not going to see that in this video. The counter trend trade is working, but we cannot let our guard down. Even though the risk is lower, I would prefer not to risk anything at all on this trade. That will turn the trade from a cheap trade to a free trade. I will trail the stop to near break-even. It is a free trade now. I might miss out on a bigger move, but I am okay with that. I am changing the take profit to a lower zone where I see some price congestion. I see the moving average is breaking out of the resistance zone, and that might indicate the price is going to resume an uptrend. When you switch biases too often, you need to be careful about going on a tilt. That is the reason I am okay taking the profit early on this trade. But you will see I hesitate a bit. I am thinking that the price might go a little lower in the congestion zone, but it is not moving fast enough. The break-even stop protects me from any loss I might incur. I don't like how the price is moving, and I am hesitating whether to book profits or give it a tad more room to move. But the trailing stop looks okay, and I'm going to let it play out. I also moved my take profit to the low of the congestion zone, and I can see that the moving average has clearly come out of the previous resistance zone and is moving into the upper congestion zone. At this point, I am not liking this trade at all. If my stop were in the negative, I would have closed the trade at this point. But because it is a free trade, I am going to let it play out. And the unrealized profit equals the original risk I had on this trade. But in my head, I am carrying both the long and short biases simultaneously. While the free trade is a psychological win, I might take a break, pause, and reassess later after this trade is done.
Order filled.
I am tempted to take a scalp here. The moving average is again meeting the high of the congestion zone, while the price is back into the previous resistance zone. It looks like a quick counter-trend trade. But then, we can also make an argument for a long trade, which has a higher probability because of the uptrend. A slight pullback, and we might get back in the long trade. But these may not be A+ trades, the biases are all messed up, and therefore, it is time to move away when confused. Remember, the opportunities will come, be patient, it is okay to miss those. The goal is to protect your capital, keep losses small and let the winners run. Just like the last trade, many trades end up breaking even or with small losses, and you miss out on profits. This will happen a lot more. But if you stick to the process, stay centered, one good trade will make your day. If you found this video helpful, give it a like and smash that subscribe button. It's the simplest way to earn some instant karma. Those buttons don't get nearly enough love, and your support really helps us grow. For more insights, check out the other videos on this channel, or our blog and the tools, in the links below. And hey, we'd love to hear from you. Drop your thoughts, questions, or feedback in the comments below. Thanks for watching, and trade smart.